Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our special edition to discuss with all of our viewers budget stocks that you need to keep an eye out on right ahead of the union budget being presented. And today, the sector on our focus is healthcare and pharmaceuticals. On this show, we will try and understand what are the key asks from both the healthcare and the pharma sector from the upcoming budget. What are the key expectations on the capital outlay that the government could be providing to these sectors, the incentives that could come in, and what would it mean for you as investors who are looking for opportunities to build their portfolios amid these high expectations and the upcoming union budget as well. Joining in on this special edition with us is a very special guest, Mr. Aditya Khemka, a fund manager in Incred Asset Management, is now joining us. Warm welcome to you, Aditya, and thank you so much for taking the time out. Also joining in is my colleague Neetu Chandra Sharma. She is the senior editor for healthcare and pharmaceuticals at Business Today magazine. So warm welcome to you too, Neetu, and thank you so much for taking the time out. Viewers, we will begin to understand the key asks and the expectations from the healthcare sector first from Neetu, and then we will come back to Aditya, you, to really understand from you how are you really advising clients, investors to really approach this sector. Neetu, over to you. Healthcare sector, a key focus area for the budget, for the government and the budget this time around. What can we expect? What has been the stance so far up until the interim budget for the healthcare sector, and what can be expected now?
Thank you, Sakshi. If it's a very important issue to discuss about. And if we look at the interim budget, the allocation towards healthcare, there was an increase of about 13%. And in terms of numbers, if we see rupees 90,171 crores were allocated for 2024-25 as compared to rupees 79,221 crores in 2023-24. So what we expect this time, that there should be a strong focus on healthcare, and we can directly relate it to the BJP's promises that it made while fetching votes during the elections, which is touted as Modi ki guarantee. So the BJP promised focus on healthcare and medicine, including extending the free ration scheme, expanding Jan Aushadhi Kendras, and etc. Further, we are also expecting some announcement on the government's flagship health insurance scheme, which is Ayushman Bharat. So the government this time promised to cover senior citizens over 75 years of age and the transgender community. So further, there should also be an emphasis on healthcare infrastructure development, especially in tier 2 and tier 3 cities. And that was especially after the COVID-19 pandemic. The same government was there in the power in that point in time. So this pandemic has given a lesson on the need of healthcare infrastructure. So we can expect something on those lines. As well as when we look at the National Health Policy 2017, that also envisages that there should be around 2.5% to 3%, 3.5% of GDP should be allocated to healthcare. And we can also further expect an increase in the health budget, Sakshi.
All right, so those are the key expectations this time around. Let's take this across to Aditya now to really understand if these are the big expectations that could also find favor with the government in the upcoming budget now. Aditya, what's your own sense when it comes to the healthcare sector? Of course, there is a lot of demand. There is a dire need for increased focus from the government on this sector. Is the upcoming budget going to be the right opportunity for the government to really look at these particular asks and at least extend some help there?
Yeah, first of all, thanks for having me. So for the government, I think this is a very important thing to focus on healthcare because, the Indian growing economy, when we say India is the fastest growing large economy, that's largely a result of our demographic dividend. And if you want to protect that demographic dividend and keep it in continuity, what we would like to have is a government spending more on healthcare and ensuring that affordability and accessibility of healthcare improves, which is where I think what Neetu said is important, where, government needs to focus on tier 2, tier 3 towns and provide both hospitals and diagnostic services and accessibility to affordable drugs. To the tier 2, tier 3. I don't think urban India is under-penetrated in healthcare. I think urban India affordability might be an issue for the urban poor, but by and large, urban India, in terms of infrastructure, is well penetrated. I think the issue really lies in with the affordability of urban poor, and in the rural India, it is more important to focus on accessibility and affordability both.
Absolutely, Aditya. Now let's try and understand this from the view of all the investors community at large, and how should they be approaching the healthcare and the pharma space. If we look at the recent setup in the stock markets, we've had record runs after record runs. Last 6 to 8 months have been, we've seen stellar of a rally, 12% uptick for the benchmark. Several sectors have even done better within the benchmark indices. There are several of sectors which have actually done, given multi-bagger returns to investors. Those, sectors like PSUs, like defense, for instance, railways, for instance. But the key economy driving sectors, they have largely stayed on the back foot. Whether we talk about IT, banking, or even the healthcare and the pharma space, there has hardly been any participation, which is a sector-wide participation as of now. How are you looking at the healthcare sector, especially the hospital space, the diagnostic space at large? Some of these stocks have actually done better when we compare to the entire pharma and healthcare space. So, where are you looking at opportunities within the healthcare basket?
So within the healthcare basket, we are highly focused on diagnostics, hospitals, branded generic pharma companies, and API companies that deal with innovators. These are the four buckets that we look at. Now, within hospitals, what we like is not the hospitals which are focused on urban India, and report ARPOBs of 80,000 rupee plus, because that's sort of, the premiumization play. And that play, I think, is by and large being discounted in the stock prices of these companies. I think where the positive surprise will really come from and could potentially come from is the play in the tier 2, tier 3 and urban poor. So we are looking at more affordable healthcare providers, case in point Healthcare Global, case in point Aster DM. So hospital chains which are more focused on tier 2, tier 3 towns. And even if they have any presence in urban India, it's more affordable presence. Their ARPOBs tend to be between 35 to 45,000 a day compared to, somebody else who reports 70, 80,000 rupees a day. So that's more affordable healthcare. So that's the hospital part. In the diagnostics, again, similar thesis. We are not playing the premiumization theme there as well. We are playing the low value, high volume game. So there, we own companies like Thyrocare, Krishna Diagnostics. These are diagnostic players that provide, industry leading quality and industry leading prices in terms of lower prices. So they are very affordable, high quality tests and available to pan India. And again, more penetrated in tier 2, tier 3 compared to urban India. Within the
Okay.
branded generic segments, we hold people like stocks like RPG Life, stocks like Ipca, Torrent. Again, because branded generic within India is an extremely under-penetrated segment, we feel that the branded generic basket will continue to grow at 10-12% per annum, and it's a high cash flow generating business. Last but not the least, API play for innovators. So we hold stocks like Syngene, we hold stocks like Newland, where API companies, because the global pharma giants are looking to diversify away from China, they're looking for an alternate source, which is where Syngene, Newland, and Hykel, these sort of become companies that benefit from these order flows, and they're all doing capacity expansion. They all have an order book which is significantly higher than what they can service with their current capacity. And I think because it is innovator driven, the pricing is not really an issue. The margins are not an issue. What the innovator looks for is not low cost. What the innovator looks for is quality, consistency of supply, inventory management, so on and so forth.
Okay. The other part that Neetu was also mentioning, Aditya, I wanted to understand, and that is with respect to the health insurance space. There is a high expectation that there could be an announcement with regards to Ayushman Bharat. There could be an extension of the policy to even senior citizens. Are there any healthcare insurance focused stocks that one can also look at to benefit from that additional focus that could come in the budget?
So look, it is difficult to decode how the Ayushman Bharat scheme will be rolled out and will it be profitable for the insurance companies. The way I would rather sort of play it is play it through hospitals which can service Ayushman Bharat patients and diagnostic labs which can service Ayushman Bharat patients. So again, there, hospitals like Healthcare Global, Aster DM, which have more presence in tier 2, tier 3 India and serve the urban poor. I think these are the hospitals which will end up getting more volumes driven by the Ayushman Bharat scheme. So I think that is the way we are playing it. We are not playing it through insurance stocks because the economics within the government and the insurance companies isn't really clear to us as to how it will benefit the insurance companies.
Okay, let me just reiterate some of the names that I got from what you were saying. You're focused on from the diagnostic space on Thyrocare and on Krishna Diagnostics. You talked about Torrent Pharma, RPG, Ipca Labs as again some of the stocks that you are looking at. Syngene, Newland Labs is something else that you have pointed out. Anything else that I have missed noting down?
No, I think we got it covered.
Okay, got that. Key hospital players is something that seems to be missing from the list. Is there a key reason why an Apollo Hospitals or a Fortis or a Max Healthcare is something that you will not be focusing on? Is there a valuation play there, or is there something else that you would want to focus on the other part and not the key hospital players right there?
So, two reasons. Number one, as I said, these hospital chains, mostly Apollo, Fortis, and especially Max, they tend to be more premiumization plays. They tend to be serving the urban rich. And that play, I think, is fairly discounted in the valuations. I don't think there is a significant upside playing that for us. The risk reward doesn't sort of make sense for us at this point. However, if I look at, let's say, Healthcare Global or Astra DM, which is what we own, there, the valuations are far more reasonable, and they are not serving the urban rich per se. They are more in tier two, tier three, and they are more for the urban poor, which is reflected in their RPOBs. So RPOB is average revenue per occupied bed. So if you look at say Fortis, Max, and Apollo, they are between 60 and 90,000 a day a bed, right? And if you look at your Healthcare Global or Astra, they are between 30 and 40,000 a day a bed. So that's clearly more affordable, high quality service.
Okay, understood. Let's bring in Neetu back into the conversation and also ask her what are the key expectations when we talk about pure play pharma industry this time around from the budget. What are the key asks of the industry and what could be on the top focus as far as the Modi 3.0 term is concerned from the upcoming budget. Neetu, what else can we look at?
Yes, actually, when it comes to pharma, the pharmaceutical industry currently aims for a valuation of around 400 to 450 billion dollars by 2047, for which we need to scale up the research and development spending. But the current R&D spending is at 1.2% of the GDP, where India lags behind the global norms. And this is despite the projected exports of $130 billion by 2030. So the industry is certainly asking for a boost in budget for the R&D spending, and Modi government has always been focused on self-reliant India that they call Atmanirbhar Bharat. So for that we can also see something more interesting going forward in PLI scheme, and similarly in the health insurance that
Right.
the claim process should be simplified and it could be faster. So we can also look at simplifying this healthcare processes, insurance and TPA procedures. Along with it, ease of doing business for pharmaceutical companies, and mid-sized companies should
Right.
also see some kind of bonanza because of the boost in PLI scheme. And
Sure.
this is it what we are looking at in the pharmaceutical products such as APIs, bulk drugs. The via PLI incentives, it is already going on, but we can probably look at a more budgetary allocation towards it. And then we can also look at the GST rationalization in terms of healthcare. And in life-saving medications, some life-saving medications still incur 5% to 10-15% of GST. So industry experts are also asking for waiving of this GST from the life-saving medication section.
Okay, got that. So a lot of asks right there. We'll really have to see what really makes it to the final union budget this time around. PLI schemes to R&D spends that should be increased, and overall looking at a valuation of $450 billion by 2047, making or maybe a size of about $120-130 billion by say 2030. More immediate is something that the industry is really looking forward to, and a lot of asks right there. Aditya, overall pharma industry, looking at the current situation and the kind of expectations we have, also with regards to the exports portion right now, which is pretty minuscule when we look at the global stage, that also has a lot of expectation to get scaled up. How should an investor really be looking at an extremely long term 5-10 year perspective when one looks at these key pharma players?
So within exports, we feel that companies which end up exporting more affordable drugs to emerging markets will probably do better than companies which end up selling to developed economies like the US or the Western Europe. The simple reason being that in emerging markets, most of these pharma companies get to brand their product, and the branding protects margins and protects pricing, and that helps them to sort of make a decent ROI on their investment in that market. Whereas in markets of Western Europe and US, there is no branding, and the company sort of company becomes gets at the mercy of the distributor in terms of pricing, and that really destroys their margins over a period of time, and hence the ROEs are really bad in those markets today. So I think as investors, while we would like to see pharma companies from India, sort of rule the world in terms of the global supply chain, but to make returns, we would rather rely on those companies that export to emerging markets, branded drugs, rather than focusing on those companies that sell to developed economies, unbranded drugs.
Right. And from the PLI scheme that the government has extended, which are the key players that you feel stand to benefit the most in case the PLI scheme is extended for some more time?
Look, the PLI scheme is a great step in the right direction, but today I think when we look at companies holistically, right? So if you look at a company that has a 10,000 crore top line and it is going to like a 200 crore or 150 crore benefit out of a PLI scheme, it doesn't really move the needle for the company. So as investors, we don't focus on PLI schemes as a major driver of stock prices because they're just not meaningful in the scheme of the company and the scheme of the stock price. So yes, many companies are availing these PLI schemes. The PLI schemes are a step in the right direction, but they are not large enough and they are not currently meaningful enough for the companies that are participating in these schemes.
Right. So Aditya, do tell us from your own sense, what is the need of the hour for the pharma and the healthcare sector as a whole at this point in time? What should be the absolute priority for the government to address in the upcoming budget?
See, I think the government is sort of walking a very tight rope here, right? So they want to bring down prices in the domestic industry, and they want the industry to sort of invest more in R&D and innovation and expand their footprint to global markets, etc., etc. So you've got two arms where you're saying I will choke you for margins, and the other arm where you're saying I want you to invest more. So the government will have to pick a side. You can't play on both sides of the table. You can't say that I will let you drive your cash flow and I want you to invest. Where do I get the money to invest? You have to let me make some margins so that I invest. So I think the government will end up focusing more on enabling the pharma companies to expand more. I think people misread the situation when they think that India is a market where drug prices need to go down. I think the government needs to wake up and check that India is globally the cheapest pharma market in the world. We are cheaper than our emerging, immediate neighbors like Sri Lanka, Bhutan, Nepal, Pakistan. Drug prices in India are almost half when you compare it to these economies, and we can't even compare Indian drug prices to the Western world of US and Europe. We are so much lower, right? So I think the first thing the government needs to do is to sort of step away from the industry and let it function the way it's functioning. Yes, if you can enable them to invest more or to be more competitive globally through PLI, through R&D exemptions, through tax benefits, go ahead and do that. But if you keep on bringing regulations that sort of deter their margins, then you can't expect them to invest because both these things can't happen together. Only one of these things can happen at a time.
Okay. In the end, Aditya, help our viewers really understand. For somebody who is an average investor, they think about 100% kind of a portfolio, and then they think of how much how much money does it go to several sectors, to indices, and when they're designing this portfolio, how much allocation do you think an average retail investor must have in pharma and healthcare, and what is the ideal strategy to approach towards these stocks and sectors?
So first on the allocation, right? So if you're an average investor, you would hold diversified mutual funds. Diversified mutual funds would have anywhere between 3 to 5% of the fund in healthcare. So by the virtue of holding the diversified fund, you hold 3 to 5% of your equity in healthcare. But if you look at the global markets, it is generally between 10 to 15% the allocation to healthcare. In fact, some of the FIIs who have India dedicated funds, their allocation to healthcare tends to be 20-30%. Some of the private equity players, it tends to be 40-50%. So for an individual investor, I would put it at around 10 to 20%, depending on their view of the world. But what is very clear is in the past decade, the Indian healthcare industry grew at 1.3x Indian GDP. And in the coming decade, the expectation is that the Indian healthcare industry will go 1.5x of the GDP. So if it grows at 1.5x of the GDP, basically all the healthcare stocks which are a play in India will do better than the other Indian consumption stories that you might be playing through the other stocks. So I think it just makes sense that if you're holding 3 to 5% healthcare to diversified schemes, you're better off adding another 10% odd through healthcare dedicated schemes. It may be through healthcare mutual funds, through PMSs, direct equity, whatever the investor is comfortable with. Second, on how to play healthcare. So again, in our view, we focus on those companies that are focused on India as a healthcare market and not really exports, because within exports, we are very selective on what we buy. But on the Indian market, because as I said, Indian healthcare segment will grow 1.5x of GDP. Anything that you pick will basically make you money over a 5 to 10 year period.
All right. Well, thank you so much, Aditya, for being with us on this edition and helping our viewers really understand what to expect in the budget with respect to the entire sectors, as well as how to approach these sectors as an investment opportunity. And thanks to you, Neetu, too, for helping us really understand and enlightening us with what are the key demands and the asks that these industries really have, and what could be on the radar this time around in the upcoming union budget. We hope all our viewers have got a lot of information as far as the pharma and healthcare sector is concerned with regards to the upcoming budget. In case there are any questions, please do write in the sections below, comment section below, and we will be able to address all those questions in the upcoming videos of ours. And in case you like this video, do comment that as well. Many thanks for tuning in onto this very special edition. But do stay tuned as Business Today Television continues to get you all the action on the other side. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that addresses all your stock related queries. Now, if you're watching us for